Let's also get in there Mr. Vijay Bambani, who's author and CEO BSPL India. Also joining us in studios is Abhishek Goenka, who's founder and CEO India Forex Advisors. Abhishek, hi, let's start with you first. And the Fed has been a big surprise into the markets. You've seen a run-up in most asset classes. But for the rupee run-up, would you say that perhaps the near-term gains have been done?
It is surprising every day nowadays. I mean, you can't even trust them anymore. I mean, last time they said that we're going to do everything by 2014, and now they said we never talked about the months. So I think it's a crazy scenario outside. So all the emerging markets out there has appreciated like crazy in the last couple of days time, especially yesterday. So all the stock markets and the currencies have moved up by 2-3%. And of course, India, I think the rupee has appreciated a lot. So I think it's a great opportunity for all the people who had missed the bus during the move from 60 to 68. And everybody out there who's having import liabilities or ECB liabilities, is a time to actually make use of it and not to get greedy and start looking at 55 and 56 that the entire market is talking about. So they should start buying the market at every single dip from 60 to 62. I think that's a great opportunity.
Well, as you said, there has been a big surprise from Fed, but with the RBI monetary policy meeting coming in tomorrow and perhaps Raghuram Rajan's first take at that, are you expecting any surprises from that as well?
Not really sure that what these guys are going to do, because ultimately he was in a wait and watch mode. But I personally feel not much liquidity tightening measure or liquidity easing measure should be there, because ultimately inflation is still very high. And I have a personal feeling that ultimately there would be tapering. So they have just decided that now, since the economic numbers in the US has not been too great and unemployment numbers have not been too great, so these guys have delayed it for the moment. But the point is, whatever money has been going across the markets worldwide, maybe in a short term dollar remains weak, and possibly the dollar index is also not going to be very strong, and we might benefit as the emerging markets are concerned. But overall, I personally feel the tapering is going to be still there. I mean, maybe next 3 months or 4 months, the tapering is going to come, and when it comes in full force, then probably the markets will get beaten up. So I don't think that we would be easing too much because of inflation pressures in this particular policy. So I think they're not going to do much on this. Maybe a little bit here and there on the MSS and the Sierra, that's all.
Abhishek, there have been some statements from the ministry earlier that we perhaps read too much into the Fed data and Fed statements as well. But we have seen the emerging market equities and currencies run up quite strongly on the back of what Fed did or didn't do. Would you say that apart from what we are facing in the domestic markets, it still is about the global markets that we follow more?
Always, Manisha. I mean, I always say that. I mean, it's not only your own current account problem, but of course, now it's a matter of where the money is flowing, how much is the money flowing, and what is the quantity of the money flowing. So I think that is what is driving the markets. And yesterday, so when these guys told that we are not tapering, and everybody got a cue of that, and then the stock market just rose. So has the fundamentals changed in last 1 week? When everybody was talking about 72, 75, and now everybody's talking about 57. So now people are giving a range of 57 to 67, that kind of range for the next 6 months. But then I personally feel that nothing has changed. It's just that the tapering has been delayed for some time, because of which the markets are reacting too much. But I don't think that you should be extremely greedy at these levels. I think this is a time when you should start being cautious. That's the way we are going as a company.
Vijay, getting you in the conversation, what's your sense? 61.66 of an intraday high, and we were talking about those kind of levels. Would you say that highs perhaps have been made in the near term, or would you wait for tomorrow's policy and then perhaps take a chance?
Manisha, I talked about taking money off the table for people who had shorted the dollar at 62.5 itself. I remember saying the dollar might just depreciate to 61.5 or 60 or whatever, but 62.5, as far as I'm concerned, I would concur with Abhishek. It's not a time to be very, very greedy and expect the dollar to decline significantly from here, because at the ground level, not much has changed. This is more of sentiment rather than concrete data, which is actually changed at the ground level. So even if the dollar was to depreciate to 60 levels, I don't think the long dollar short rupee over the medium to long term has changed significantly. This is more of a very deep technical correction, because let's not forget the kind of rally that the rupee saw from 69 to 63. You are likely to see a reversal also of that magnitude in the future. Now, whether that happens tomorrow or whether it happens after a month, is something that the market would know better. But I think volatility will cut both ways, and I would not really give too much beyond 60 for the USD to decline.
Abhishek, would you say that the choppiness in the markets could return back when the FOMC meeting is back again on perhaps October 29th or rather September 29th and then again in December? So we still have 2 meetings before this year ends, and are you expecting that kind of choppiness to come back as we saw in this week itself?
So my personal feeling is that ultimately how much money are we going to invite from outside, that is going to be the main driver of the markets. And I personally don't feel that all the money which has come during the 2003 to 2008 kind of years, and of course after the QE started after 2008-9 onwards, can go in such a short time. So I feel there is a lot of money to be still gone from various emerging markets, and now it's a kind of a war between the emerging markets and the larger G4 countries. So in the coming years, and I'd like to focus on this, that when we were growing at 8-9%, at that time the US was negative, the UK was negative, the Europe was negative in terms of growth. Now everybody is picking up, and now we are at 4%. So if after 1 year we both are at 3%, I mean the US is at close to 2% and we are at 4.5-5%, there is not much difference per se. So I think the money thing is the main driver. I mean, where does the money go? If the money is not coming in India, I am not really very bullish on the Indian rupee.
All right, so that's the take coming in from both our experts, that the rupee, or rather you shouldn't get greedy, and 61 perhaps is a good level to start buying or digging your feet into the kind of currency move that we already have seen. With that, Abhishek, we'll let you go. Thank you so much for joining us with your sense on the currency. With that, let's go for a short break as well. When we come back, we'll talk about the Fed's decision also sending gold prices higher. The precious metal is trading around $1,367 per ounce, up nearly 4.5% in last 24 hours. And the crude price is also surged, marking its biggest gains in 3 weeks. The Brent crude prices is back at around $111 per barrel.